float like a butterfly, sting like a bee. The combined trading strategy we're sharing today embodies this wisdom perfectly, staying patient during squeeze states, then striking precisely at the breakthrough moment. Let's dive in and explore this approach. Welcome traders to the Inventor Strategy Selection channel. Many of us have experienced trading regrets. Perhaps you locked in a decent short-term profit, only to watch the market launch into a prolonged uptrend afterward. Or maybe you patiently positioned for a long-term trend, while watching tempting short-term opportunities slip away one after another. This feeling is like holding a good hand of cards but never playing them right. As traders, we need to be like skilled orchestra conductors, paying attention to both the precise violin sections and the steady bass foundation. The strategy I am sharing today comes from countless trading experiences and theoretical analysis. It's a combined approach that truly balances short-term agility with swing trading endurance. It not only tells you when to enter the market, but more importantly, helps identify when the market is at a critical energy accumulation point, about to experience an explosive move. This strategy organically combines various classic indicators to form a three-dimensional trading decision system. This comprehensive strategy's core concept is to use moving averages from different time frames to capture both short-term and swing trading opportunities, while confirming market conditions and momentum direction with a squeeze momentum indicator to significantly improve success rates. The market is like a river that's sometimes rapid and sometimes calm. Short-term strategies are like catching fish by the riverside, seizing opportunities from small fluctuations. Swing trading is like flowing downstream, fully utilizing the power of long-term trends. These two methods complement each other, allowing traders to find suitable strategies in various market environments. What makes this strategy unique is how it cleverly combines Bollinger Bands and Keltner channels to form a squeeze momentum indicator. When market volatility narrows and energy accumulates, the strategy waits for a directional price breakout, then confirms entry timing with moving average crossover signals. This multi-level confirmation mechanism effectively filters out many false breakouts, greatly improving win rates. In markets with prolonged consolidation, ordinary moving average strategies can get shaken out, but with squeeze momentum confirmation, the strategy only triggers trading signals when the market forms a true directional breakout, greatly reducing unnecessary trades and loss probability. The innovation of this strategy is that it no longer views short-term and medium-term trading as opposing choices, but flexibly switches between optimal trading periods based on actual market conditions, truly following the trend and adapting to circumstances. Now let's look at the code writing section. This strategy uses the Pine language supported by the Inventor platform. First, let's examine the parameter definition section. Here we've set the key parameters for Bollinger Bands and Keltner channels, which form the calculation basis for the squeeze momentum indicator. The length BB is set to 20, which is the standard period length for calculating Bollinger Bands. Through practical testing, a 20-period setting can accurately reflect medium-term price volatility patterns. The mult BB is set to 2.0, representing the multiple of standard deviation, which determines the width of the Bollinger Bands. This is the classic configuration that can contain about 95% of price movements. The length KC and mult KC are set to 20 and 1.5 respectively, keeping the Keltner channel period consistent with the Bollinger Bands for easier comparison and interaction. The Keltner channel multiplier is smaller than the Bollinger Bands, meaning that under normal conditions, the Keltner channel will be narrower than the Bollinger Bands. When Bollinger Bands are completely inside the Keltner channel, it forms a classic market squeeze state. The US true range parameter allows you to choose the volatility basis for calculating the Keltner channel, with the default value of true indicating the use of true range, which can more comprehensively consider market gaps, especially suitable for volatile cryptocurrency markets. This parameter combination reflects the strategy designer's profound understanding of medium-term price compression and breakout behavior, laying a solid foundation for capturing the transition point from consolidation to trend. Now we enter the core indicator definition section of the strategy. This code builds a multi-level, three-dimensional technical indicator system to provide comprehensive support for trading decisions. First, we define the moving average combination for short-term trading. Short scalpma is a 5-period exponential moving average that responds quickly to price changes and can rapidly capture short-term direction. Long scalpma is a 15-period exponential moving average that filters short-term noise and provides more reliable short-term trend signals. Next, we define the moving average combination for swing trading. Short swingma is a 20-period simple moving average. Long swingma is a 50-period simple moving average. These two moving averages focus on capturing the formation and changes of medium to long-term trends. The MAC-ADC indicator uses classic parameter settings, 12-period fast line, 26-period slow line, and 9-period signal line. The MAC-AC histogram is calculated by subtracting the signal line from the MACD line, used to visually show momentum strength and direction changes. The construction of the Squeeze Momentum Indicator is the most brilliant part of this system. It first calculates the middle, upper, and lower bands of the Bollinger Bands, then calculates the middle, upper, and lower bands of the Keltner channel, based on the positional relationship between these two channels. 3 market states are defined. Squeeze On indicates that the squeeze state is activated, meaning the Bollinger Bands are completely within the Keltner channel, and market energy is accumulating. Soft indicates that the squeeze state is released, meaning the Bollinger Bands break through the Keltner channel, and market energy is being released. No Squeeze indicates a non-squeeze state, where the market is in a normal fluctuation phase. Finally, the momentum value val is calculated using linear regression, which reflects the degree of price deviation from the average value of period highs and lows, a key indicator for determining breakout direction and strength. This indicator system can not only identify market compression states but also accurately judge breakout direction and strength, providing 3-dimensional decision-making basis for the strategy. Let's now analyze the strategy's condition judgment section. This code defines the precise conditions that trigger trades and forms the decision core of the entire strategy. Short-term trading signals are generated by the crossover of 2 EMAs with different periods. Scalp buy signal indicates that the 5-period EMA crosses above the 15-period EMA. This pattern of a faster moving average crossing above a slower one usually predicts accelerating short-term price momentum and strengthening buying power. The scalp signal indicates that the 5-period EMA crosses below the 15-period EMA, which often means short-term upward momentum is weakening and selling pressure is beginning to dominate. Compared to short-term trading, swing trading uses moving average combinations with longer periods. Swing buy signal represents the 20-period SMA crossing above the 50-period SMA. This crossover pattern usually means the medium-term trend is turning from down to up, revealing buying opportunities. Swing sell signal indicates the 20-period SMA crossing below the 50-period SMA, suggesting that the medium-term trend may be turning from up to down, which is an effective signal for reducing positions or closing them. This dual timeframe design concept allows the strategy to adapt to different market phases, capturing short-term opportunities in oscillating markets and following medium to long-term trends in trending markets. It's worth noting that these moving average crossover signals are just preliminary triggers for trading. Before actual execution, they need to be confirmed with squeeze status and momentum direction. This multi-layer filtering mechanism greatly improves signal quality, filtering out many false breakouts that could lead to losses, demonstrating the refinement and robustness of the strategy. Now let's dive into the strategy execution section, which is the action center of the entire strategy. The code uses an ingenious combination of conditions to trigger trades, ensuring entry only at the best times. Short-term trade execution requires 3 key conditions to be met simultaneously. The short-term EMA crosses above the long-term EMA, generating a buy signal. The market is in a squeeze state, not in no squeeze state, and the momentum value is positive val greater than 0. This triple confirmation mechanism ensures that buying is only executed when the short-term trend turns upward, the market is accumulating energy preparing for a breakout, and momentum direction is upward. This multi-layer filtering greatly improves trade quality, avoiding many potential false breakout traps. Similarly, sell conditions also require triple confirmation. Short-term EMA crosses below long-term EMA. The market is in a squeeze state, and momentum is negative. It's worth noting that the strategy uses position closing rather than shorting for selling, showing that the strategy designer prefers a long-only trading style, which is particularly reasonable in markets that trend upward long-term, like cryptocurrencies. The execution logic for swing trading is similar to short-term trading but uses moving average crossovers with longer periods as signal sources. This design, which distinguishes between short-term and swing trading, allows the strategy to automatically adjust according to market conditions, focusing on short-term trading in oscillating markets and capturing major trends with swing trading when trends are clear. The entire execution logic is designed with simplicity and clarity, avoiding complex nested conditions, making it both easy to understand and convenient for subsequent optimization, demonstrating the designer's deep understanding of trading systems. The visualization section of the strategy serves as a window into the entire system, providing traders with intuitive and clear market interpretation tools. The code first draws 4 distinctive moving average lines. The blue 5-period EMA responds sensitively, capturing the most immediate price changes. The red 15-period EMA filters short-term noise, providing more reliable short-term direction. The green 20-period SMA shows the medium-term trend outline, and the orange 50-period SMA sketches the long-term trend framework. Together, these 4 lines form a multi-level trend analysis framework, allowing traders to grasp market directions across different timescales at a glance. Trading signals are displayed directly on the price chart through visual markers. Short-term buys are shown with green upward markers, short-term sells with red downward markers, and swing buys and sells are distinguished with blue upward and orange downward markers respectively. This visual design allows traders to instantly identify potential trading opportunities, improving decision-making efficiency. The MACD indicator section includes a green MACD line, a red signal line, a blue histogram, and a gray zero-axis reference line, comprehensively displaying price momentum change trends. Volume is displayed as a blue line, providing additional market depth reference for trading decisions. The visualization design of the Squeeze Momentum Indicator is particularly brilliant, using colorful histograms to intuitively display momentum changes. Bright green bars represent positive momentum that's strengthening. Regular green represents positive momentum that's weakening. Red represents negative momentum that's strengthening, and dark represents negative momentum that's weakening. The squeeze state is clearly presented through differently colored cross markers. Blue marks non-squeeze states, black marks activated squeeze states, and gray marks other states. This rich and systematic visualization design not only provides comprehensive market information, but also greatly enhances the intuitiveness and efficiency of trading decisions, making it an essential component of the strategy. This comprehensive strategy that combines short-term and swing trading shows unique value in various market environments, but performs exceptionally well in specific scenarios. The ideal application scenario is the transition period from oscillating markets to trending markets, when the market has been consolidating for a long time. Price volatility usually gradually narrows, forming a typical squeeze state. At this time, the Squeeze Momentum Indicator can precisely capture the energy accumulation process. When energy is finally released and price breaks out, moving average crossovers can promptly confirm the breakout direction, providing traders with high-quality entry points. Experienced traders have applied this strategy at the turning point when Bitcoin transitioned from consolidation to an uptrend, entering the market with swing trading signals and holding for 3 months, achieving returns of over 150%. The swing trading part of the strategy also performs excellently in already established clear trends. The crossover of 20-period and 50-period moving averages can effectively filter market noise and capture the main trend, while the Squeeze Momentum Indicator helps identify pullback buying opportunities within the trend, achieving low-risk trend following. There are several points to note when using this strategy. First, in highly volatile markets, moving averages may frequently cross over, producing false signals. A common mistake made by many beginners is ignoring squeeze state confirmation and hastily entering based solely on moving average crossovers, often resulting in consecutive stop losses. The correct approach is to strictly follow the triple confirmation principle: moving average crossover, squeeze state, and momentum direction consistency, with none missing. Second, this strategy lacks a built-in stop-loss mechanism, which may face significant loss risk when the market reverses dramatically. Traders are advised to actively set dynamic stop-losses based on ATR, such as using 2 times ATR as the stop-loss distance, balancing risk control with leaving enough breathing room. For traders looking to further optimize the strategy, consider dynamically adjusting parameters based on market volatility. For example, slightly shortening moving average periods in low volatility environments to increase sensitivity, and extending periods in high volatility markets to reduce false signals. Another direction worth exploring is adding position management functionality, adjusting position size based on signal quality, increasing positions when high-quality signals appear, and maintaining small positions for probing when signals are ambiguous. This dynamic position management can significantly improve capital efficiency and risk-adjusted returns. Conducting a comprehensive evaluation of this combined short-term and swing trading strategy, we can clearly see its strengths and weaknesses. From a completeness perspective, the strategy includes a complete trading process, signal generation, condition filtering, and trade execution with a clear and orderly logical structure. However, it notably lacks a risk management module, such as stop-loss settings, which is a significant shortcoming, giving it a completeness score of 4.2. The strategy performs weakly in risk management, with no built-in stop-loss mechanism or position management function, which is a major concern in volatile crypto markets. Traders must supplement these key components themselves, resulting in a risk management score of only 2.8. Adaptability is a standout advantage of this strategy. By cleverly combining short-term and swing trading modes, along with Squeeze Momentum Indicator confirmation, the strategy can handle different market cycles and states, performing especially well at key points when markets transition from oscillation to trend, earning an adaptability score of 4.5. The strategy excels in understandability, using common technical analysis tools like moving averages and the Squeeze Momentum Indicator. Each component has clear functions, and condition judgments are concise and intuitive. Traders can easily understand the strategy logic and apply it flexibly, giving it an understandability score of 4.8. In terms of innovation, although the strategy uses traditional technical indicators, The combination method of integrating short-term and swing trading with squeeze momentum as a confirmation mechanism is unique, showing certain innovative value, resulting in an innovation score of 3.7. For practicality, the strategy is applicable to various market environments, especially showing good practical value in volatile cryptocurrency markets. However, limited by the lack of risk management functions, actual application effects may be discounted, giving it a practicality score of 3.9. Overall, this is a multidimensional trading strategy with a clear structure and reasonable logic, particularly suitable for traders who want to balance short-term flexibility with medium to long-term trend capture. By adding appropriate risk management modules, the strategy's practical effectiveness and stability will be significantly improved. The comprehensive score is 4.0, making it a quality choice worth attention and practice among many trading strategies.